Alright, fellas. I had to do a stupid Zoom meeting for my class that I'm doing. I'm taking a summer class, so jump right into it. We got data dropping at 10 o'clock. It's manufacturing PMI. It's supposed to affect it heavy. I don't know if I should get in before then. Super overbought. We haven't swept a high that, was a 30-minute high here. I don't know if I marked it even. No, it's not a high here, but it's a 30-minute high on MQ. And it's not a session high, so shouldn't have too much confluence to it, but I'm looking for ES to grab this and then snyank down, but we just swept out Asia highs here, and then we have London lows. This is an hourly break of structure for me. That's how I mark them out. I'm going to slip into the 15-minute because I'm going to see if I can grab any executions here. A lot of confluence to short right now. We are super overbought. But if there's buying pressure, we might slip into one of these bearish for value gaps I have marked up ahead. So let's get into this shit. Let's see what's gonna happen. We might have a continuation lower. But in the hourly, like I said, we broke structure down here, so could just slide up all the way up into here, which is completely possible. This high is not a session high, but it's so much higher on ES than NQ. NQ swept out that high. ES did not. So I'm going to see what happens here. 15-minute. This is in the hourly still. Let's look at the 15. I think we might want to slap on some of these shorts here in a second. It would be against the trend, so that's the only reason why I'm looking for more confluence aside RSI. At the top. Ah! RSI at the top is the only confluence really that I have to short aside from sweeping Asia and NQ swept out this previous aftermarket or pre-market high. So I'm looking into if we were to short here, I would want it to grab I would want it to grab this high too on ES. That way both would have no problem synchronizing lower. But since ES didn't grab it, it could easily charge up more and look for more of a reason to grab it. I mean, it's low resistance liquidity either way, but at 10 o'clock we have manufacturing PMI. Yeah, at 10. And then friggin' Powell speaks at 1 o'clock. And that's just going to bring volatility. PMI doesn't really, at least from what I experience, hasn't really messed with the market too badly. If we get a 1-minute break of structure, maybe we could do something. Is this equal highs? Is this a double top? No, it's not a double top. I mean, it's looking juicy for some quick shorts in the 1-minute, but we might meet this average here in the lower time frames because 15 minutes not getting touched. But in the lower time frames, we might hit that average and keep going up. That's the thing. And I would rather be on longs going up that way than shorts. Let's look at the hourly, see if there's any hour SMTs. Oh, a huge SMT here. High time frame SMT right here is forming. And lagging index is NQ. So I could get on shorts based off of that, but I would want a slight retracement back up into it. I'm going to get rid of this high because now we're focused on I'm going to grab some shorts here. I'm going to grab 2 shorts
Order filled.
here. I'm going to grab 2 shorts here, and I'm going to put my stop at, I'm going to risk a little bit more than usual today if I put my stop up here this early, but I also don't want to get knocked out right off the bat when 10 o'clock hits if PMI gets sent in both directions. But we have a huge high time frame SMT. But the thing is, so you see this, so this from this high to this high, if this candle expires and it doesn't balance out, then it's safe to say that this shit's gonna crush. I also, only reason why I thought about that, right, was because the that high that I just got rid of, slip back, this high right here, didn't get filled on ES. That's the only reason why I thought of it. I was like, oh shit, that's an imbalance right there. I could put it at these highs too, which might save me some capital if I'm wrong. But it looks like it might just degrade. But I mean, at 10 o'clock hits, micro has, I've seen it literally wick 50 points in each direction and then choose its direction. So it's like, you know, sometimes you just don't want any leverage until the macro opens, just because, especially if you're seeing a setup, right? Because I guess I'm just talking about leveraging, de-risking when your setup isn't completely there. Like, usually I would prefer to take trades. Now this is crushing. I would prefer to take trades after the macro for that reason, because I've taken trades that were correct with the correct daily bias. I was patient, waited, all that stuff, right? And just because I didn't wait for the macro, I got crushed, right? So I got crushed, and then I got sent into the other direction. So I'm not gonna leverage deeper into this. The reason I'm not going to leverage deeper into this is because if we do start wicking back to my break even when the macro opens in a little second here, I won't be closer to my average. I'll be pulling my average away from where I'm at now, and I don't really necessarily need that. If I'm right, I can sit here and take, I can sit in 2 contracts all day when I'm possibly 200-point move. You know what I mean? So I could sit in that all day. Getting it, a lot of people kind of don't realize they're doing this, but because this is what I did, at least back in back before I understood what I was doing. I would see this, right? I'm like, damn, 130 profit. It's kind of making me feel something, making me feel sexy and shit, right? And that's the benefit of having these out, because you can see kind of what you're really risking here. Putting on size while you're in a winning trade is good, right? But don't get that misinterpreted in your head. If you're in a correct trade and you keep leveraging into it, you're going to keep pulling that average down. And you're adding risk. So when it goes the other direction, like we just saw this hit 160, 165. If I had bought another 2 contracts, I'd probably be only up $70 or $60 even, right? So you got to keep in mind, if you're pulling your average too far down or what. I might just secure something right now, just as is, just to secure some cash. Because like I said, look, the 5-minute RSI is about to meet the average, and that's usually when it likes to make another move in either direction. So, and we're starting to turn on the 15-minute. in the average, and there's some buying resistance. It looks like we're pushing. There's some pretty good sell pressure though on ES, and we're in the hour on the ES, so the hourly looks really good for shorts. It looks pretty weak, and probably because we were searching to correct that imbalance. So what I would really want is to see this fair value gap being validated. That would make me want to add size. If this gap in price, this 5-minute gap in price gets invalidated here, which I don't know why I don't have this shit on. There we go. So like I said, this is a perfect example, right? A perfect example. I didn't leverage in, so I still have, the current position, the current average where I decided to go into the trade, right? If I were to buy into this more, yeah, I would be up way more. Or not way more, maybe like $80, $100 more if I were to buy 2 contracts than I am now. But the thing is, if you just wait, the price that the money that you want to make off the trade will come to you if you're right? And what a lot of traders fail to realize or fail to reconcile with is that when you're adding size like that, you're only thinking about, oh, I'll make more money. Oh, this trade will be worth more. But you're failing to be responsible for the loss that you're also able to accumulate with the higher size than what you're currently at, right? I took this trade knowing that the macro hasn't opened, knowing that in 8 minutes fucking data is dropping, right? So there's no reason for me to add more size than I'm feeling comfortable with. My full position size is 5 contracts. So, and that's an A+ setup. That's if I'm struggling to not find a reason to short or to get into my position. So it's like, I'd much rather be able to sit in a trade with my average at the top and not have to think about leveraging in than sitting here and being like, holy shit, my average, just got pushed down to here. If this 5-minute candle wicks upwards and at 10, I'm cooked. I just burned all that profit. And you're also like hedging your own protection. You know what I mean? If I pull my average down lower, and this is the power of pulling your average down lower, I'll probably be like around here off 2 contracts. It's a 68 point separation. Versus, if I were to just sit here and be patient, I'm going to go off this wick just for an example. I'm already off 106 point protection. There's not a lot, but in terms of short-term trading and being able to give you a chance to get out, this is giving me hella time and protection against a flip around in the thing. And that's another reason. And that brings me kind of into time frames, right? So when you're looking into an hour time frame, an hourly time frame, which I have marked out here, I always, before developing a bias, I see where the trend is going in the higher time frames. I mark out my liquidity. I mark out, hourly break of structure or hourly trend. Distinctify that or whatever the word is. I don't even know if that's the fucking word, to be honest. But you just figure it out, right? You figure out which way the market is going. It's simple shit. There's no need to complicate it. You figure out which way the market's going. You wait for confirmation. I waited for this hourly candle to expire to be like, okay, market is going in this direction. What could it want? It could want Asia highs and then tank and flip shit. It could be going for these highs and flip shit. But in our case, there was no reaction off the Asia highs. New York opened, slapped those highs immediately. But we created an imbalance. Sorry, my nose is so stuffy right now. I'm like feel like I'm snorting a line of coke and it's just clogged up in there. That was disgusting. But so we're finding some resistance here in the 400 level. But yeah. And this is another imbalance kind of, this is dropping a lot stronger than NQ is. So it might be a valid reason to start thinking about getting out here. Because you can always go back in, and 5 minutes before data drops, I mean, that's not a bad reason to get out of it. But then you can't forget about your other confluences, right? This gap in price here where a bullish fair value gap, right? We find orders there that will push us higher. If we had stronger bullish price action right now, usually it would tap into this, get close into this candle, and then start pumping up maybe into this next bearish fair value gap. But it's looking like we just invalidated this 50% mark. I consider a fair value gap invalidated. A lot of people do it differently, but it's basically the same shit amongst most people. But if a candle closes below the 15 or below the 50% mark, I just consider it invalidated. Same thing with if it bounces into it too many times and taps into the fair value gap, you could just assume that that's not being used. I need to get I'm really trying to not scale not in like size or anything, but scale in my ability to manage like trades better. Like I'll be in a winning trade for this example, and half, like 50% of me wanted to just accept the win at 400 and call it, right? But 10 o'clock hasn't opened. PMI might come out bad and hot. Let's just bring this over here to my other monitor. Oh, need to get some tissues out. Hold on. Because I'm still figuring out for sizing and like exiting trades and whatnot. I'm still figuring out like if I should even do any of that stuff. Like, how should I do it? What am I going to be doing? Because this trade could easily go out and sweep these London lows if the price action is suffice enough and good enough. I also have to piss like a racehorse right now, so it's like making me want to just exit this trade and then think about it at 10 o'clock. But I find myself also being like kind of negative when it comes to like being kind of negative when it comes to like my trades. Like it's not lack of confidence, because I had confidence to get in this trade at the top before there was like really any sign of sell pressure, right? Before these 3-5 minute candles showed up in this invalidation of this fair value gap, a lot of traders would have waited and been stuck right here betting that it was going to continue lower. But so I act with confidence, and I act with conviction when there is conviction. High time frame SMTs tend to be respected, and I found that the lagging index is always the one that chases the current one, right? If you got in on ES, you would have been fucked. Not fucked. You would have been in a pretty good spot. In contracts per point is better too here, so you would be chilling for sure. But it's just my point in the sense of where do you find, because everything's an act of probability. There's no certainty in the market at all. So I just found it way more probable that if you act on the lagging index, there's so much more profitability in it. I'm fucking cracking a sweat. ES is taking a shit. NQ is still struggling to turn this hourly candle into a negative one. I have to be careful here with ES. If ES sweeps these lows, I realize that marking out liquidity on the other chart that you use, if you use two charts or two indexes when you trade, is incredibly important. I used to be lazy about it and be like, all right, more shit that's on my screen is terrible. The more shit that's on my screen is not good. Oh, well, we got PMI about to open up. Let's see how this changed the volatility of the market here. Oh, shit. ES shot the bed for a second. Might grab, might go out here, get out a little bit. How did PMI drop? How hot was that? Looks like it dropped ass. It's still pending. The prices came out a little less than forecasted. Just a little less. Prices came out a little less. Yeah. So we just need to sit and wait. So that brings, so like I said, okay, so like I was saying, marking out, if you use SMT divergence in your confluences, or you just like to compare the trend, you don't really necessarily look for anything specific, you just compare trends with two different indexes, NQ and ES being the main ones, then sorry, I just want to make sure I'm not retarded here. I'm going to take 50% here. No, I'm not going to take 50%. We're about to get a 15-minute breaker structure. We're probably going to take these lows here. I'll take 50% once we hit the lows on ES, because it looks like we want the lows, but I don't know if we'll make them on NQ. But I feel like I opened up so many doors with my conversation, and I keep closing them off because, yeah, I'm going to grab 50% here.
Order filled.
And I'm going to lock in, like, I'll just put this at break even for the most part, but that actually might have formed a bullish SMT. I don't know. Yeah, but like I was saying, if you use two different indexes, marking out the session highs and session lows of like the draws of liquidity, super important for this exact reason. I would have not been able to even I might have not recognized the high time frame SMT if I didn't have both the same times of draws of liquidity marked out. Like if I didn't have them marked out, I could have easily just passed over that thinking going into longs, because my bias was when I was looking at pre-market, I was like, all right, this shit definitely is going to go up. We spent the last 2 days last week, getting crushed. A lot of smart money movers probably were selling because we were getting crushed. But that was expected since NVIDIA had their earnings and it was pumped way more than what they probably expected. And statistically, after earnings reports, the stock crashes out because people hedge their profits during earnings. Good earnings, at least, and NVIDIA had a good earnings. ES is dense in tech. NQ follows. I was trading QQQ options, so you can kind of just once you've been looking at the market, you kind of just know when things kind of could or should happen. Obviously, there's moments of manipulation, so you can't really tell all the time, but yeah, it's super important to mark out your highs and lows on both indexes if you use both. Before, I used to not do that, and there'd be times where I would have conflicting points in my trading, and that really does affect your executions,
And same thing with having too many confluences. Like I have like 5 or 6 confluences, and I haven't changed it since like the last probably like 7 months. If you can master the same 6 or 7 confluences, 5 even, keep it simple, then you're going to be going back to that all the time. You're going to find profitability. Because in all this, like, especially beginners, I'm still a beginner, but especially when you just start getting into trading and this type of trading, people tend to forget that this is all probability. The person next to you, trading next to you, doesn't have has the same likelihood of being wrong as you do. The only thing that differentiates this from gambling is like the fact that this is like data, and it's like not ran by like a corporation. It's a reflection of like countries. So it's like, and companies. So you just have to find the trends, and a lot of it's mentality. Majority of it's mentality. If you go onto my Instagram, I have Instagram where I talk about this stuff, and I haven't posted in a while. Just on that in a while, just because I changed platforms, so it's a lot harder to. I used to trade on TradingView through Tradeovate, not Top Step X, and it was way easier to record your trades and leave stuff behind, so you can like kind of like do trading recaps. But the reason I do these live videos instead is because you get to see my mindset. I could talk about my mindset. I could talk about what I'm going into, why I'm going into it actively, and you guys can actively see the numbers changing on your screen. And I feel like if I had that when I first started trading, I would be chilling. I'd be just straight chilling. So I decided to kind of prioritize this, and then as this place starts to build a community a little bit, I can start, going on Instagram. But I might figure out a way to simplify or mark out my trades on TradingView so I could go on there and start talking about it a little bit. We're kind of just chopping here. I'm about to form a 1-minute SMT, but we can blow past these 1-minute SMTs. It's a bearish SMT. ES is the lagging index, so I think I just need to be patient here. That's what I was talking about before, actually, was that, I struggle with patience when it comes to being in trades. Like, the second I'm profiting like more than $200, I'm itching to get out of the trade. Because I hate to see this. I hate to see this number degrade, right? But it's not about that number. It's purely about admitting or taking the responsibility of when you're wrong and when you need to exit the trade, to when you're right and you're like, get rid of this shit because this shit's taking up my screen. Just admitting when you're wrong and right, and just accepting the trade, accepting what it is, right? The more you want it, the less it's gonna come to you, because it's gonna be the only thing you're thinking of. When you have a mindset that is kind of observatory towards the market, where I don't care where this number goes, but I do care, right? You have to care just enough, but little enough to where you're not so locked in on what this position equals to, you know what I mean? Because when you get super honed in and you kind of like marry your position, and you're not taking responsibility in that sense, you know what I mean? Because this could have easily gone the opposite way. Say I took a long here, I was like, oh, this is just a retracement, and we're gonna go higher, and set my stop loss to negative 150, and then I'm like, okay, it was too fast, let me knock it down to 250, and then it goes down there, and let me knock it down to 300. You know what I mean? Now you just went from accepting a $150 loss to accepting double that in maybe 10 minutes. just because you couldn't accept being wrong. I mean, the reality of trading is who can just face their fears, face their, you know, face their emotions, and face the emotional pain of being wrong. You know, who can do that better? And the most profitable traders in the world do that the best, right? So you got to go in there with that mindset, but it's easy to forget about that shit. It's the same thing. It's the same thing when you're going to the gym. You know, same thing when you're eating too much carbs or eating too little protein. It's the same. It all comes down to discipline. End of the day, it comes down straight down to discipline. You know, so you got to stay disciplined. As a general statement, it goes way deeper into it. And if you're kind of grabbing onto what I'm saying, but you want to go deeper, the best book I could recommend is Trading in the Zone by Mark Douglas. He breaks this stuff down, what I'm talking about, and a lot of what I know about mindset is from his book. Best shit ever, and it's pretty interesting read if you genuinely care about this type of trading, you genuinely care about this type of stuff, that's like a required read. It's a required read because it breaks down so many key things that traders go through, and it's guaranteed. Like, you can't just say, oh, I'm gonna beat that, I'm gonna beat that statistic. You're not. The reality is you're not. But there was one interesting thing I just read about this in this one chapter called, like, it was in Responsibility chapter of that book. And he talks about how the famous statistic of like 95% of traders fail, right? 95% of traders fail, he was saying, because after 3 to 5 years, they lose everything. Like, most traders lose like generational amounts of wealth. They lose, so much money. It's all perspective based. If you're a millionaire, you might lose a couple $100,000. If you're a college kid who works at fucking McDonald's, you might lose, a few grand, and that be enough for you to like want to quit. But he was saying how, traders go into the market expecting the most. They have this euphoria that they see how much money they can make in the market, but then the second they lose it, you acquire this fear mentality, this fear-mongering, like mentality towards the market, where you feel like you're just gambling because it's probability. You know what I mean? You're playing on probability, but it's difficult. It's definitely difficult. But I'm thinking about exiting the trade here soon, because hourly we're trending up on ES. Still, we failed to break structure down here. This is our chance to break structure. Still trending up. There's some buying pressure down here. I'm gonna slip into the lower time frames. So 30-minute is even looking pretty, and this is a pretty low time frame. Failed to break structure here in the 30-minute. I would have been pretty feeling erotic if we broke structure down here, because we would definitely slip into these lows. 15-minute failed to break structure here too. Almost a double top. We're just filling in that SMT, I believe. And just because it's a higher time frame SMT, I believe that's the reason why we're still lower. That might have been the move for the day. You either caught this or you caught downwards. That might have been the move for the day, but I might just take in this win here, because I'm not willing to wait much longer than this, especially with this price action. I'll start cleaning up my chart here. So like I said, I mark out Asia blue, London red. I only do that because on TradingView they have a indicator that marks them out for you, and I've just been trading with that indicator for like a goddamn 6 months, so it's just how I know them. Yeah, I think it's looking like I want to exit this trade. It looks like buying pressure down here is pretty good. And another thing I like to talk about too is the correlation of time frames. So when you are looking in the hour time, I'm sure a lot of you know this because it's kind of common sense if you take a deep thought about it for a moment. When you're looking in the hour versus like the 15-minute, you're looking at an hour worth of candlesticks that happened. An hour where that's 61-minute candles. So I mean, if you think about it like that, the power and conviction you're gonna have in the higher time frame is a lot stronger. And I was listening to this guy who makes recorded, posted, public, whatever, millions of dollars through prop firms, or he got his first $1 million payout or something through Apex, I think it is. He was going through like a workbook podcast type thing, and he's an ICT trader, and he was saying how, and I just lost my train of thought. Wow, that's fucking crazy. That's crazy. Yeah, I have no clue what I was talking about. Wow. I'm brain dead. Nah, yeah, I'm brain dead. I'm straight brain dead. I'm hungry. It's 10:15. I haven't ate nothing. Okay, let me check my phone real quick. No, yeah. All right, so I'm thinking about exiting this trade here. Oh yeah, about higher time frames. I got this idea from him because he says he only trades in the higher time frames. Like he'll execute in the lowest time frame he'll look into is the 15, and like sometimes 5, but that's like when he's like executing and like confirming his bias or confirming his conviction. Make sure all the time frames align up from the 15-minute. But he says most of the time he's trading in like the 30-minute, hour, and like up. And it's because what I just was talking about, an hour has so much more data in it. So when you're seeing, 30 fucking hours worth of data behind it, you can say with a lot more, with a lot more balls, you can talk about it with a lot more balls than, if I was looking in the 1 minute, it's like, what the fuck am I even looking at? You know what I mean? And I used to be that guy that trades in the, everyone does their own shit differently and they find success differently, obviously. But I just find it way easier to confirm your buy, confirm breaks the structure in the hour, slip into the 30-minute, see where price action is going, slip in lower a little bit, 30-minute or 15-minute, and see what's going on even then, because it is in a more exact and precise, move, so you can really execute pretty accurately, even in the 15-minute chart. But I like to slip into the 5-minute, just to see and get beginner, I like to catch the beginning of the trade. Like I execute in the 5 and 1 minute chart just to really optimize my position, but I've already confirmed that I wanted to get in the trade through the 15, 30, and the hour. Right? So you kind of got to use each time frame differently. But like I said, everyone has their confluences set differently, set apart. So I like to even go in the 4 hour and the daily just to see like, where does this want to go? Like I'll look at RSI usually when I'm in the 4 hour and the daily, because if we're showing overbought in the 4 hour and the daily, and then I'll slip in the hourly and it's still overbought by 10, and I'm like, okay, this shit wants to get crushed. And the only reason why I haven't exited this trade is because I'm kind of got the mental note that if it gets to like the 170, 180, 160 price on my position, then that's going to be signs that we're changing direction here. And it looks like we are changing directions as I say that. There is a little bit of bearish gaps here. I can see if we want to look for more orders to grab that London low, but I doubt. I really highly doubt that we're gonna search for it getting 2 points away, like 3 points away on ES. We're 3 points away on ES, but about 70 points away on NQ. So we could really shoot forward here on ES, but we got a few 5-minute gaps here, so I might look for orders, and that's another thing that I like to think about too, is that, but it's also hard to think about it, really hard to think about it, because you're looking at it, you're losing $30-$40 at a time depending on your leverage. It's hard as fuck to think about anything else. You just want to sit here and stare at that and just hope. But reality is, I did have that mental note of wanting to exit the trade at like 160, 170, like I was just saying as it was happening, right? But that's why patience is key. Waiting for the true confirmation of your trade. True confirmation to exit, right? There is conviction here. Oh no, that's not what I was going to talk about. I was going to talk about how the market is not linear, right? We may be trending up, right? There is a lot of conviction upwards here. In the higher time frame, we are trending up. We are going against the trend, okay? And that's why I went in with less leverage. Would I have made $1,500 if I went in full leverage at the top right here and absolutely sniped the trade? Of course. But the other end of that stick is that there is absolutely no certainty in the market. And if I went in with 5 contracts at where I am now, sure, would I have been up, a ape stupid shit amount of money? Yes, I would have been. But did I already lock in $317 on the day? And it's Monday, and I'm sitting at my computer for the last hour? Of course, you know what I mean? You got to think about it. You don't need to maximize your profits at all time. You just need to minimize your risk. Because sometimes in the market, it really comes down to make the money when you can, when the market's offering it to you, and then defend your capital. Just completely defend your capital. Maybe I should put the camera here, because I keep looking over here, because my second monitor is a little bit bigger. But what I'm going to look for right now, because in the higher time frame, we have confirmation we're going higher. Only strong confidence I had was RSI was way overbought in every time frame, off open, and we developed a high time frame SMT, which I was hoping to hit London lows with. I don't think I finished what I was saying earlier too. Market's not linear. All right, so it's gonna go up after going down for a while to grab orders, to grab money, to trick people into, there's plenty of terms for it. Faking out, it's gonna go back up, say, okay, we're trending up again, and then continue to crush lower, right? And that's where gaps in price happen, fair value gaps and stuff like that. And then to bring it to fair value gaps, when we have stacking gaps like this, a lot of the time it's like a barrier system. Like one can get invalidated, but the next one might grab all the orders on the first fair value gap and then tap into the next one, and that be enough orders to continue this thing lower. The only thing that is really confirming me mentally is that, and this is where I use the 1 minute chart. 1 minute's overbought by 10 points. Right? So if we do crush this in a minute and invalidate this gap, as long as we're not manipulating higher and higher, and we're starting to move quicker and catch some momentum, I'm calm. I'm chilling. I mean, I'm made $300 already. I've secured it, and my trade's at break even. But I'm considering that stacking fair value gap rule, and I'm also, looking at these lower time frames, we're overbought here. We might want to decompress a little bit before going higher, or vice versa is going lower. In the 5 minute we were just overbought by 10, a little bit more than that. Oh no, just right by 10 before we started to reverse. So the market's not linear, plain and simple. And if you're patient enough to wait the market out, then of course you're going to reap the benefits, or you're going to get crushed. And that's the beauty of the market. You got to know when you're wrong, got to know when you're right. And that's like probably one of the biggest things that come into the market is, you got to know when you're wrong and really know when you're right, or else you're just going to get screwed over every time. Because if you don't know when you're right, you're not going to take profit. And if you don't know when you're wrong, you're not going to know when to cut losses until it's absolutely so monstrosity. It's such a monstrosity of a number for you that you're going to have to cut your losses. I only know this because I was doing this shit. And I'm only now, like the last 2 months now, really locking in my ability to recognize these types of things. Super overbought in the 1 minute. Oh no, we're barely overbought in the 1 minute. On ES, 15 minute, met the average. 30 we're overbought still. In ES, hourly we're overbought still in ES. Let's slam this back into the hourly. I like keeping the hourly open on the ES. 15 minute we're slightly overbought. Hourly, 30 minute we're overbought like shit. Yeah, we're overbought. So, but it looks like I'm gonna have to start admitting where I'm wrong here. That this is not gonna be. We might capture orders on this gap here and trace lower because it can wick through, and we didn't even invalidate this gap yet. We didn't close through the 50% mark, so we still have potential to go lower. The only thing that kind of makes me feel like I'm gonna have to exit this trade somewhere up here is the fact that this got 3 points from sweeping it. It might have found orders before then. And I've seen, just because liquidity is set there, right, at that price, doesn't necessarily mean it's going to go all the way there. I've seen like high conviction liquidity, session highs, session lows, come from a single point away from being swept, and the market tumbles in the other directions like it completely swept liquidity, like textbook way. So sometimes the market finds orders before the draws of liquidity, and I mean, I would probably consider that less likely, but it is something to consider. I mean, we're 70 points away from London lows on NQ, but 3 points away from sweeping it on ES. So the market just might have pressure in that area. But these next few candles is really where it's going to be at for me, the deciding factor. If we invalidate this and keep going higher and there's no reaction off touching this gap, then I'm going to just exit. Plus we're getting to 48-minute mark. Hour of trading. You don't want to sit in front of I don't want to sit in front of this shit. I have math and shit that I just started, math class I just started for summer, just to get the shitty math classes out of the way. So I might have to do some of that. I got some chores to do, so you got to enjoy your day too. You can't just sit in front of the market. Market is a lot like, you got to get the low hanging fruit, bro. You can't just spend all day trying to knock the high hanging fruit out of the tree. You gotta take your time and take what it's given you. A lot of the time, if not all the time. You're gonna get lucky. You're gonna get lucky and smack trades. 100%. Execute. I need to piss so bad. I keep drinking water like I don't need to piss like so badly. But yeah, guys, I need you guys, the ones who view this, subscribe to my shit. Or subscribe to me, because rather than Subscribe to me. Comment down below what you would like to see. If you're new, you're probably new. I have no videos on my thing anymore. I used to use this when I was a kid, this channel to post video game stuff, and I might come out with some fishing videos or get a GoPro and like kind of do both at the same time, right? Kind of turn into like the life of me kind of thing. So it's just subscribe to me. Comment down below what you'd like to see if you're involved in this trading. Comment where you're at in your trading. What are you doing? Are you paper trading? Are you buying prop firms and just spending money the way you need to feel out the experience, or what? You know what I mean? I'm interested in that stuff. I'm always gonna reply. But yeah, definitely look into that or do that for me, guys, because that way it gives me motivation to keep doing this stuff. Because I really hope you guys find value in this type of thing, because this is the type of videos that I needed when I first started this stuff. Just because like you're marking stuff out, but it's just like what? There's no teacher holding your hand, right? So watching videos like this kind of confirms your own ability here. Really, this is just a waiting game here for me. I'm gonna set it right over here. Although if this hits 100 again, I might just exit out, call it $400 day. Because it looks like the trend is going to be higher. But we did get a reaction off that, but there's a lot of buying pressure. Because we are acting against the trade. We are acting against it, or acting against the trend, rather. Yeah, it's easy to forget that the trend is, in the hourly, it is up. So it failed to break structure. Both ends failed to sweep lower liquidity to continue higher. So buying pressure is strong in the lower part already. Just swept high, went lower. Is going to probably continue higher for the rest of the day. Or just chop. Market was just waiting for that news. I don't know. I'm real interested in what this last fair value gap is going to offer me. It might turn it around, but I doubt it. A lot of strong candles here. Or like strong momentum. You can just kind of see it. Just like after this candle, just zoop, trended up. They didn't break it. Another trend up. Chop for the most part. And then just strong candle, strong candle. But I've also been in trades where like this has been the case. It got all the way up to like the third fair value gap, and then tapped into it and then just got crushed. But I've already made my profit. I already hedged my losses. No reason to stay in this any longer, really. And I got laundry to do and shit. Man, and I could crack on another coffee too. So let's see if there's any 1 minute SMTs before I exit. Could just let this thing run too. Put it at break even and just see what happens. It's another possibility. That's another thing. With one contract, you got nothing to lose. So take profit down here and be like, all right, if lunch session opens while I'm taking a shit, I don't need to look at it. If it fails to break through up here, that'd be funny. Imagine. It's looking pretty weak up here. I don't know. Maybe it is worth checking out. But being that the gap is here on ES, I don't see any reason why it would not continue higher. Yeah, it looks like it wants to continue higher too. Which is okay. Manufacturing PMI I think came in a little less hot than forecasted. A little less hot than the previous PMI too. Only by 0.2, so it's really nothing, but price came in weaker. I don't know if that's a good thing or a bad thing. I think that's a good thing. It's cooling off.
Order filled.
Oh, shit. Manipulation right up into my shit. All right, well, that's going to cut it for me today. I'm going to keep it at that. A single trade. It's beautiful. Going back, I want to go back into this. So last week I ended up taking 12 trades. Most trades I taken, recognize that trend, right? Most trades I taken, and the biggest loss I had. So there was a point where I was up $200 this day. Yeah. Just I took like a lot of was hedging here, adding. Took a big loss. About $300 loss. Initial thing was a short or a long, and then I shorted it and got crushed. Just FOMO, essentially. And then once the trend started to develop a little bit more, I was like, all right, this looks pretty juicy. Caught some money, caught some scalps here, and then I kind of just started breaking down after this point. I should have stopped trading because I was like, all right, I already was down. Now I'm at break even. I think I was up like $50 on the day. I was just trying to make more money, and then look what happens, right? So biggest loss. Should have probably just not even traded that day anyway because it was poop price action. So how much do I got until I pass this account? 15, like a little less than $1,500, I think. Something like that. I don't know where you figure that out, but doesn't matter. Done for the day. I'm gonna keep it simple. I'm not really gonna look into this shit anymore for the day. Like I said, if you guys find value in this, let me know in the comments down below, and I'm gonna have this shit posted in a few minutes for you guys. So yeah, I appreciate you guys. Deuces.